Hello and good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. In these videos, we are going to see what happened yesterday in the market, what is going on, and what we have to expect from today's financial market. It's Thanksgiving holiday, and happy Thanksgiving for all the people that they're celebrating this in a very lovely actually day where you can be with your family, sitting and enjoy your holiday. Uh, today's the market is closed in United States. However, financial market is not closed, and we can trade the futures still. We can trade too many other instruments and in so many other in all other markets all over the world. Sometimes market can be surprising, can be over surprising. And yesterday was one of those over surprising. Yesterday we saw, as you see here in the chart, let me zoom it in, just like to have bigger. Look at here. This is S&P 500 at 4,720. This is Dow Jones. Again increased to 35,000, almost 36,900 some. And the Nasdaq also increased. These numbers were totally against of most of the expectations. The reason, as you know, yesterday we had SP 500 to increase 0.23%. Nasdaq closed up 0.44%, and just Dow Jones, just Dow Jones was flat with the opening price. These numbers, why they were against of all expectations. Just look at the data that we had yesterday, and most of them, most important of the data that we had. Look at the FOMC meeting minutes. Look at the PC data. The PC and core PC data that we had yesterday, they showed that US inflation is increasing with the most pace in the last 31 years. We had the increase, the PC data yesterday showed that actually based on the government's personal consumption expenditures price index, we had the service and good both. It's like in overall, we had the prices of the goods and the services jumped 0.6% in October. And in the past year, in year over year, we had the inflation, PC inflation, above 5%, jumped from 4.4% of September. It's the highest level since 1990. It's 19th century. Decade, sorry. For like more than 3 decades. Why then we should see the markets to increase? That's the question even for me. Just look, just including this data, including this inflation data, let's go and see the FOMC meeting minutes. What FOMC meeting minutes says? Some participants suggested that reducing the piece of the net asset purchasing by more than 15 billion each month could be warranted to see that the committee would be in a better position to make adjustment to the federal fund target rates range. Participants stressed that the maintaining flexibility to implement anyway, I'm not going to read it announcement. You can read it from anywhere. Federal Reserve meeting minutes last night was telling us that inflation increasing unexpectedly more than what we were expecting as we saw in the yesterday's PC and core PC numbers. And they are suggesting to increase the 15 million sorry, to 15 million asset purchasing tapering, the tapering of asset purchases, to increase this decreasing, to increase the piece of tapering with more than 15, maybe 20 or 30, which was widely expected in the last days. And I was talking about that like 2 weeks. I am talking about that the 2 weeks that even if not in December, from January we should see that. All these numbers are telling us that we should go towards more hawkish policies. We should start more tapering. If we increase the tapering, the piece of tapering, it means that we should see the faster rate hikes. Then these movements doesn't seems real, doesn't seem something normal. Anyway, this is what we have. Therefore, from the technical side, yes, we are in a clear uptrend right now. But from the fundamental side, there is nothing we can bet on, and we should see the weaker numbers. That's what I expect from the numbers, from the charts. This is the Nasdaq, Dow Jones, and SP 500. Yesterday, the oil price, the oil market. This is about that. Let's go see the other numbers. I talked about this PCE numbers. I talked about the Federal Reserve meeting minutes. But yesterday it was not just about that. Wednesday was the most busiest day of the week. Reminding that day before on Tuesday evening we had API weekly crude oil stock loss, and we had 2.3 million barrels increased in US inventories. And then yesterday, EIA data showed that, let me see the exact numbers. I don't want to go with the wrong numbers. Where the hell is that? It's like more than 2 million was. Oops, sorry. I just want to find the exact numbers. Let's go. Let's just like EIA retails numbers. EIA up. Here we go. Yeah, one crude oil inventories. 1,100,000. It's like you'd say $1 million. The market increased the inventories, but based on EIA data, increased more than 1 million barrels a day. 1 million barrels in the last week for the weekend at November 20. So it means that both of them, it means that the US crude oil inventories is increasing. Look at the chart. We could see weaker chart here after increasing the crude oil inventories, but it didn't happen. Stock market was the reason to increasing higher to these numbers. These numbers are telling us that we are in a fake situation. But however, should that be the fake for the crude oil? No, for the crude oil, that decrease was after the news of using this emergency inventories, emergency reserve or inventories of the US government. So that because SPR. Anyway, these numbers in crude oil can increase because, as I told before, the winter is coming. Yeah, it's like I was watching the Game of Thrones again in the last days. So winter is coming. Always talking about the winter is coming. Yeah, the winter is coming, and it's a cold winter as we know, and therefore with the current data, with the current supply and demand in the market, we can see more demand for the oil. So the oil price can be both fundamentally and technically can be supported. Let's go see other data what happened yesterday. So about the EIA and API data. One by one, I want to just check out the data that we had. So we had yesterday morning we talked about the RBI and the Reserve Bank of New Zealand and its decision. And then we had the German in Eurozone. We had the German business climate to fall back to 96.5. Okay, and then mortgage. We have the mortgage markets data from the UK. It was not that much good to talk about. I mean, they didn't have enough data, but totally was not fine. I mean, that's just like low level of importance, but they had nothing good to talk about that. And then let's go to the US again. Continuing jobless claim, 2 millions. 2 million, 2 point, I mean 2,550,000, 2,050,000. The lowest level since beginning of pandemic, and then initial jobless claims for the first time fell under 200k at 199k, These numbers are telling us that the inflation is increasing incredibly, and at the same time, the labor data is moving faster than expected. The labor data is going up, so therefore the Federal Reserve should do something. That's what the data telling us. GDP on the third quarter was 2.1%. Comparing with 2.2% of expectation was not that good. But still, the economy is increasing 2% in a quarter. We had 2% in a year, like very just like ahead of before pandemic, like 2% in a year. It was amazing for the GDP. But now the GDP in the third quarter just is a 2.1%, even if it's less than 2.2% of the estimates, even if it's less than 6.7% of the first quarter, but still it's increasing 2.1%, and its economy is increasing. Good trade balance was positive, better than expected at negative, but it was in a negative zone at 82, minus 82, but still it is 82.89. But still it was better than minus 94. Better, much better than expectations. Wholesale inventories 2.2% from 1.1%, 1.4% inventories increased to 2.2%. It's good. Inventories, it's good. We have enough inventory, so we have enough supply. It means that it means that we should go towards solving the supply chain as well. Economy is fine. GDP price index increased by 5.9%. Good orders, non-defenses, good orders increased by 0.6%. That's amazing. All the numbers are telling us, durable goods orders, including defense numbers, fell 0.5% instead of increasing 0.2%. But it was including defensive because we didn't have too much defensive numbers orders, but non-defensive we had 0.6% increase, more than 0.5% of expectations. All the numbers are telling us the economy is fine. Economy is good. Maybe that was the reason to see. Look at the chart. Look at the chart. This okay. SPY I'm talking about here. Let's go to the US dollar chart. This is the US dollar index. The data yesterday, they were better than expected. They were amazing. And FOMC meeting minutes also showed the hawkish. So the US dollar was still holding its demand situation, demand position, and it's increasing. So 96.70, and last night we were close to 97. So for now, the 96.70 is another signal that the US dollar still is in a demand. With the current data, yeah, the demand can be increased still, even if you have some correction, but still we are in a positive situation. The gold, while economy is increasing amazingly, while the stock market is increasing, while the US dollar increasing also at the same time, with these reasons, we shouldn't have the demand for gold, and it is what happened. We should see the higher bond yields, and we saw that bond yields increased. So increasing bond yields putting more pressure on gold while the economy is increasing. This is the market situation. But as I told, S&P 500, Dow Jones, and Nasdaq at these levels, they are not the real levels at these. I mean, not the real. I don't mean with the real that they don't cost that much. It means that the market situation is telling us we are in a dangerous area. Okay, guys, it's about that. Today, the U.S. market is holiday. It's a holiday in the U.S. The market's closed. However, in Japan, in Europe, we have very busy day with the European Central Bank (ECB) that's going to publish its account of the monetary policy meeting. And ECB Lagarde will speak. ECB President Ms. Lagarde will speak. In UK, MPC member Haskell will speak, which is very important for the British. It's important for the British. And BOE Governor Bailey. So we have the Bailey to speak. We have Ms. Lagarde to speak. The president of the Central Bank of European Central Bank of Britain and British Central Bank. They are very important. Well, we have the GDP numbers we will have the GDP numbers from Germany. And as I told, ECB's all those Ellerson also will speak from Ellerson from ECB also. We have on other speeches. However, it's a holiday. This holiday in US will be a very busy day for the Europeans. This is what market was. I talked about the market, about the data and their expectations. Now about the let's say about the cryptocurrencies. The cryptocurrencies. Let's say where is my Bitcoin chart? Oops, here is the Bitcoin chart. Same as the other assets, Bitcoin also increased. Uh, However, the current situation, still we don't have at the current situation still we don't have enough. Yeah, I'm just checking the news. Uh, mm, as a holiday, it's just nothing. There is nothing else than a holiday surprise and the cash flow that may probably because of the stock market's flow into the cryptocurrency market. Other than that, we don't have any reason to increasing to see that last hours increasing in the cryptocurrency market. And still, we don't have enough evidence and we don't have enough data that can confirm the uptrend in US in cryptocurrencies. And the current downtrend still can continue, and we have enough reasons to see them in a downtrend. This is about the cryptocurrency market. Okay, but the Euro USD yesterday, Euro USD fell under 1.12 all the way down at 1.18, 1.1180, sorry, 1.1180. And showing as last days we were talking about, Euro USD still in the weaker position. Same as GBP pound, is the pound also in a weaker position against US dollar, as the data shows that the US economy is moving faster, much faster than Europeans. Showing that with this increasing, we can see bond yields, higher bond yields in the US. So therefore, the carry trade will put them in a weaker position. Okay, guys, thank you so much for watching this video. I hope it was useful for you. Waiting for your comments and your idea, and let me know, please, if it was, I mean, if it had something for you, if you liked it or not, and if let me know if you want me to cover something more and see some more data. Thank you so much for watching this video. See you guys tomorrow. It's again holiday still in the US, but we have the other markets to open and we have the futures market to trade. See you guys tomorrow. Bye bye.